Hey traders, Michael or Minifrost here. You're here for another episode of Common Sense Market Analysis. Today is Hump Day, October 8th, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, we got another day of making new all-time highs. Today's high comes in at 673.21. If we just go to a smaller time frame perspective just to check it out, zoom out a little bit. Here was the previous all-time high, and this was none other than a spike the high and rip it right back down. Wasn't by too much, gave you about 9 or 10 points or so, but that was one of the infamous spike the high and rip it right back down in the other direction trades. It's pretty much the same thing as the spike the low and rip it right back up. It's just the reverse roll of it. We like to use those to our advantage sometimes. What else do we got? Well, we're up $3.99, or 0.60%. We'll give that a funny how that works, with the 369 numbers. The other day we mentioned the most recent breakout area right here. That number comes in at 667.29. Why is it a most recent breakout area? Well, because the market stopped right at this area, came back down, and then we got back over it. And as we know, markets love to come back and retest the most recent breakout area, which we saw right here, came up close right here, pretty much nailed it right here, maybe a few cents off, but you get the point. So staying above 667.29 can almost be utilized as a pivot-ish number. I'm saying pivot-ish because it's not one of our main pivot numbers that we have. One of our pivot numbers, which I highlighted in green, comes in at 663.18. We talked about that on Monday. You could call it 663.18, 663, give or take. Staying above that is the bull case scenario. That is going to be an important area that we need to maintain price above if we want to continue to grind up higher, making new all-time highs. Coincides right with the 20-period moving average. As we know, markets don't like to be too extended from home base, so maybe we'll see a little return towards the pivot. Not saying this has to happen tomorrow or on Friday, but it's in the cards. We'll keep it in the back of our pockets. Nothing moves in a linear line. Markets move up and markets move down. Not to mention just throwing that out there, but we are approaching a big fat round number right at 675. That is a big fat semi-round number. It's a target for the market, could be utilized as some overhead resistance. I'm not telling you to take this as a trade, but this certainly is a target towards the upside. Okay, these numbers are important, these big fat semi-round numbers. They're magnetic, markets are attracted to them, so we'll see how she treats 675. Let's quickly jump over and take a look at my number one favorite market leading indicator, Camp IWM. We have this overhead resistance zone drawn on the board from 244.30 to 247.18. And as you can see, the market is playing some back and forth with those two numbers. We spiked the high by just a little bit, pulled back, tried to get going the next day, couldn't really get anywhere and closed below the back end number. Then yesterday, we pulled back towards the front end of the overhead resistance zone and closed right on it. And now today, we're back up towards the 247.18. So just playing some back and forth action. I told you that this is a place where the market shouldn't just waltz right through. And she's showing you right now that Camp IWM is having some trouble getting going. Okay, tomorrow or the next day, she might just be able to bust right through, make new all-time highs, as we are with a bunch of other markets like the spiders and the Qs. That certainly is an option on the table. But the other side to it is if we start to close below this zone right here, then she's going to want to make her way towards the 20-period moving average, home base, possibly even a spike of home base and getting to this breakout candle low that we mentioned the other day at 240.57. But just from a technical analysis perspective, we can see, just like the spiders, and this was kind of a clue given to us before the spiders even did it, was to spike the high and rip it right back down in the other direction. Right here, we spiked the high. This was the previous all-time high. We spiked it and ripped it right back down. So that was a little precursor to the spiders. Not to mention up above we have a big fat round number, and it's an important one in fact, and that happens to be at 250. We could go ahead and put that in red because that is a huge milestone number for IWM. That's 1/4 of 1,000. If you're looking at it in a yearly perspective, that is 1/4 of a millennium. So that certainly is going to be an important destination for Camp IWM. Just wanted to go over the shorter term perspective real quick because we had some support and resistance numbers working for Camp IWM. If you take a look on the screen, you could see some numbers on the board. We got support number 2 at 244.15, the first overhead resistance number at 245.80, and then the second one at 246.80. Support number 2 was pretty much the low of day, spiked it by just a touch, around 25 cents or so, and then ripped it right back in the other direction and never looked back. There is a reason why I put overhead resistance number 1 on the board. As you can see, we did come up short right here. That is a first time, best time situation. So on the second time around, we're either looking for a spike of the number or wait for the next number in the sequence, which was at 246.80. That was pretty much high of day. As you can see, another first time, best time situation. We got the spike that we were looking for, and that was pretty much high of day. But then take a look right here. We used the 245.80, which was originally supposed to be used as overhead resistance, and price came back down towards that number and used it as support on the way back down. These numbers can be utilized as support or resistance either way you look at it. That just goes to show you that the numbers are important. We'll give that a how do you like dem apples. Alright, let's switch gears and take a look at the shorter term perspective of the spiders, starting with inside the numbers. We're taking a look at the 0 dark 30 notes. This is the morning game plan that's laid out for members well before the opening bell. And we got a lot of numbers to work with, as you could see. So we'll start with the morning pivot. That came in at 669.30. Above the pivot, she's bullish. Below, she's bearish. And one of the first main destinations for overhead resistance was at 670.35. Some other numbers you need to be aware about is the next number in the sequence, which is 671.75. And then we were able to use those two numbers to create a zone of overhead resistance with a midpoint number in between at 671.25. That's going to be important later, and I'll tell you why. And then lastly, one more zone up above at 672.55 to 673.40. Alright, so right at the vertical line is today's activity. We got a lot of numbers going on, but I'm going to break this down as simple as possible. Right here in green, we get the morning pivot, and then in red, we have all of the overhead resistance numbers that I just mentioned. We don't need to worry about any support numbers. The first support number was pretty much the pivot at 669.30, and as you can see, we came up a tad bit short. We never filled this gap right here from yesterday's session, and then we pretty much never looked back. But let's go take a look at some of the overhead resistance levels that we had on the board. So we opened pretty much right on 670.35 right here. The open was at 670.26, so about 9 cents below. We spiked it by a touch, and that was indeed some overhead resistance to start the morning. Our main target was the pivot down below. And this is a perfect example of why we sell into strength. They left some traders at the altar trying to exit at the pivot or the gap right here. So we always want to sell into strength. We leave the few extra cents or points to the pigs, the greedy pigs, trying to squeeze out every last penny. And then as we could see, we started to get above that first level. We reached the midpoint phenomenon number, blew past that, but as you could see, we did have some overhead resistance right at the back end number at 671.75. And the reason why I mentioned that the midpoint phenomenon was going to be important was because we utilized it as support on the way back down. So what was originally overhead resistance, we blew by it, but the market still found that number to be important and utilized it as support. Right here, we came up a little bit short right here, and then we eventually started to close candles above, and we were headed towards the next target up above, which was 672.55. And just from the end of the day price action, you can see that the market was pretty much playing ping pong off of that number. The first order of business at either overhead resistance or support is that price stops going in the direction that it was previously going. So as you can see, price pretty much stopped right at this level, ate some time off the clock right on the number, Didn't really get too much of a reaction off of that number, but as you could see, that number was still important. Hit it right on the dot right here, started to get below, got back above, used it as support on the way back down right here, again right here, and then same deal, just playing ping pong back and forth with the number. Started to get below price, and then we got back above, and then closed above. And this entire trading day is a great example as to why this is a morning business. Because as we get deeper and deeper into the afternoon is a totally different type of tape compared to the morning. It's a morning business for a reason. A lot of traders had that morning trade right at the first overhead resistance number, and then we even had some traders front run the pivot, and that was the morning trade. Everything after that becomes more difficult. Never really got that big of a reaction at this level right here. And then towards the end of the day, we were just playing ping pong back and forth. The majority of our trades that the live room and inside the number members take is in the morning. Get in and get out. We don't want to stick around for torture time. You could pause the video, read the notes, and go back to the chart to double check the work. If you're someone struggling to get the morning game plan or the numbers, or you need some guidance while you trade, then inside the numbers / live room is the perfect fit for you. Not only do we have the SPY game plan and the numbers, but we also have a list of stocks on the move. Today we had 3. Unfortunately, none of them hit their entry targets. That's okay. We prefer quality rather than quantity. We're not going to force a trade or create a trade out of thin air. And then not to mention, we have a list of 13 different markets with support and resistance numbers. We got the Qs, IWM, SMH, gold, Tesla, crude, silver, natural gas, dollar, Bitcoin. We got something for everybody. If you don't just want to trade the SPY, you don't have to. We have an opportunity around the corner for everybody. You just have to find what works for you. That's inside the numbers / the live room. If you purchase the live room, then you get inside the numbers for free. Definitely some interesting stuff going on in the transportation department, my second favorite market leading indicator. The other day I mentioned how the market's job is to trick, trap, fool, and frustrate as many traders as possible, which is exactly what the transportation department did. We started to close above this downwards trend line. We closed candles above on Friday, closed candles above on Monday, and then yesterday we had a little bit of a turnaround Tuesday, right back to, you guessed it, the pivot. And now today we came up a little bit short of this upwards trend line, but we did manage to find support right at the 100 period moving average. And look at where we closed. Remember, it's about how you close them. That's the most important thing that we can gather from today's session is where they closed them. And they closed pretty much right on the downward trend line. And we are coming up to the apex of the triangle right here. And when we do, if we do, that means time is up and the transportation department has to make a decision whether she wants to break above or break down below. They can definitely do it before we reach the apex of the triangle, but this is an important timing aspect for the transportation department. Time is up at this area. Time is more important than price. Are we going to have another test back towards the pivot, or is she going to want to start to close candles above this downwards trend line like we were previously doing on Friday and Monday? We'll see if yesterday's price action was just another test of the pivot one last time before she takes off, but we'll have to wait and see what my second favorite market leading indicator wants to do. That could be a good tell of what might happen in the other markets. It's my second favorite market leading indicator for a reason, behind Camp IWM. Let's go ahead and take a look at the Q people. She's up $6.93, so we could give that a funny how that works. Why isn't she up $6.94? Why not $6.91? There's a reason, and obviously we're never going to know the exact reason, but the market decided to be up $6.93 for a reason. Stopped at specific numbers for a reason. Everything happens for a reason in the market. There's no accidents or coincidences. Those 369 numbers, whether you want to believe it or not, and we've seen it time after time after time again, they're important. So we are finally making new all-time highs. No surprise there. Price can come back to test yesterday's breakdown candle high. That number comes in at 609.71. When it comes to these breakdown candles, they could be utilized as resistance on the way back up. Take a look at what happened at this breakdown candle right here. We could draw a line at the high, and we did indeed find resistance at that area. Wasn't the exact high, but again, it's around the vicinity of the high. And then on the flip side, market can utilize it as support on the way back down. We do have some important support and resistance for the Qs. We got numbers in uncharted territory, and those numbers will be ready for Inside the Numbers / live room members. Last but not least, we got SMH shaking my head, the semiconductors, smash mouth. She's up $9.02, 2.68%, and we had a nice bounce back from yesterday's price action. Yesterday we were down $6.33, 1.84%, and now today we're up 2.68%. A stone's throw away from making new all-time highs. Yesterday we did talk about the entrance to no man's land. That number comes in at 335.18. We didn't quite get there today. We made a low of 336.42, but that was going to be a bull-bear battle. Whether she wanted to fight that area or go ahead and fill this gap and then jump right above it. Just so happens the gap is at 333.69. I guess we didn't need to grab any of that. So this whole area right here is declared unfinished business. And what a shocker, now we're approaching new all-time highs once again. A stone's throw away. We are also a stone's throw away from an important big fat round number at 350. That is going to be a destination that SMH wants to go to. We have to get above yesterday's breakdown candle. The high of that breakdown candle is at 346.67, and there's a reason why we closed pretty much right around it, is because that is overhead resistance. Why didn't the market just keep on going up and up and up and try to reach the 350 number? Well, these breakdown candles, the high around the vicinity of the high is important. It's overhead resistance. There's a reason why we stopped right at that level. So obviously we need to get back above that if we want to make a test or an attempt of the previous all-time high and even 350. Or the flip side to it, and it doesn't have to be tomorrow or the next day, but we might want to come back and test the entrance to no man's land and or the gap at 333.69. Funny how that works. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. Don't forget to like, comment, subscribe, all that good stuff, as it helps me and the channel out a lot. With that said, I'm 𝐼𝐴𝐴𝐴. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. I hope each and every one of you has a great rest of your day. Stay safe and take care now, folks.